Cam Barr for Cam's Mortgage Minute on Wednesday, March the 12th. Hey, for those of you who didn't know it, I spent about 12 years in the car business, and there was an article that caught my eye that just came out, and it was saying that Canadians are becoming more selective and picky when it comes to buying cars, and they're certainly buying less, and the numbers would prove it. Overall new car sales were down 2.2% in February compared to a year ago, and the manufacturers that have taken a lot of this hit is Toyota, who's down 12.5%, Honda down 26.5%, Mercedes down about 11.4%, Audi down a whopping 26.2%, and Nissan down 17.7%. So definitely, as you can see, the luxury or the high-end car market is suffering. J.D. Power is a company that does a lot of work in this field, has what they call PIN data. That's basically defines as Power Information Network data. And they're saying that 63% of buyers who financed a new vehicle in the last 12 months went for a loan of 6 years or longer. And typically these loans even have balloon payments. And I remember, when I first got into the car business years back, you'd have leases that were 24, 36 months. Car loans usually ran 3 years, 4 years, but there was nothing like 6, 7 years or longer. The other thing, it showed that the percentage of buyers going for an extended loan has about doubled since 2008. So more and more people are stretching these loans out longer and longer. Leasing is also up, accounting for about 18% of new vehicle transactions. The other number that was interesting was that the average typical loan payment is now $560 a month. That's right, $560 a month, and compared to just over about $500 for a typical lease. So if you think about that, $560 a month for 6 years or 7 years, we're talking 40, 50, I mean, that's a ton of money when you talk about it. The average sale price has dropped as well. Now it was about $28,500 in February compared to about $31,600 last December. So again, with the signs of a slowing economy, these things are happening. Manufacturers are forced to offer bigger and bigger discounts. I remember when I got into the car business, that was when they used to kick in the GST over Christmas, and basically the manufacturers used to give you that, or a GM did. And now it's pretty much everywhere across the board. When I got in, 0% financing was rare and unheard of, and they'd offered it once in a blue moon. Now it seems like every manufacturer is doing it, and the import manufacturers never did it. You would never see a Toyota or a Honda offering any kind of creative financing, but now it's pretty much par for course. The other thing that's interesting is that the turnover rate of car dealerships is slowing. The average time it takes to turn over inventory before used to be about 60 days, and now it's extending to 70 days. So what all of this is pointing to is the fact that, again, the economy is slowing. But it hasn't slowed people for wanting to trade their vehicles in. And typically what happens the moment you buy a new car, off the lot you go, you're going to lose money. And within a year or so, you're usually underwater, which means that you owe more money than it's worth. And it seems about 35% of the vehicles that are being traded in are underwater right now, compared to about 29% a year prior. So what that's telling me is that more people are trying to bring their cars back. Either the payments are too much, they hadn't really thought about it, now they're returning them, and now they're stuck. So, you know what, it's all pointing again to a slowing economy and people being in a bit of a pinch, who perhaps didn't really give much thought to what could lay ahead before they signed up for those payments. Take it from personal experience, folks. I spent years in that business. I would not buy a new car. I'd buy a used car. That's the way to go. I mean, you already take, somebody else has taken the depreciation. You get to buy a nearly new car. Usually 3 years is the magic time. At that point, the cars have really dropped the most. After that, the depreciation slows and slows and slows. But those are the ideal times. So, take it for what it's worth, for my 2 cents worth, I would rather be sinking $560 a month into a mortgage payment than a car payment, but hey, that's entirely up to you. Anyway, I thought I'd share those. Those were some interesting numbers. And again, anything you need mortgage-wise, don't hesitate. Give us a shout. It's Cam Barr, Cam the Mortgage Man at the Auxilium team.